With slowing sales, industry-wide layoffs, and increasing material costs, some experts are ready to say we're in a recession. Let's take a look at what a recession is and what one would mean for the industry. A recession is a significant, widespread, prolonged downturn in economic activity. Officially, that means seeing 2 consecutive quarters of negative GDP, which puts the US in a recession as of this past summer. However, the U.S. Bureau of Economic Analysis reports that as of 2022's third quarter, the economy is growing again, and there are more than just 1 or 2 factors that make up a recession. The housing market index is one of them. That industry metric, which gauges the outlook for home sales, dropped to 33 in November out of a 100-point scale. This is the lowest it's been in a decade, aside from the first month of the pandemic, and anything lower than 50 tends to spell trouble. Just a month earlier, interest rates on standard 30-year mortgages passed 7%, giving the largest single-year increase in 50 years. Though they're still not nearly as high as 1981's peak of 18.53%, interest rates have ticked back down a bit, but according to the National Association of Home Builders, which publishes the National Market Index with Wells Fargo, the housing market has been in a recession since midsummer, and where the housing market goes, the broader economy tends to follow. So what does this mean for homeowners? Mostly staying put. The majority of homeowners with a fixed-rate mortgage bought their properties at a better rate than what they could get now. This leaves them with little incentive to sell, and the National Association of Realtors expects to see a 7% drop in home sales in 2023. Around 1 in 10 homeowners may be in trouble when their adjustable rate mortgages rise to match the current rate. But economists don't anticipate a 2008-like meltdown when 35% of mortgages were adjustable and homeowners found themselves owing more than what their homes were worth. And while foreclosures are expected to spike, they probably won't be at Great Recession levels. As for brokers, it's possible they'll really suffer because they can't make money if home buying slows. And this can spell trouble for the brokerages they represent too if they didn't stockpile enough funds last year. Despite yet another interest rate hike from the Fed this week, the U.S. Treasury Secretary Janet Yellen told 60 Minutes that while there's a risk of a recession, Americans can expect to feel good about their personal finances in 2023. Whether that will bring more demand back to the industry remains to be seen. Check back with The Real Deal for future updates.